Welcome to the Professionalist Real Estate Investing Podcast with your host, Tony Jacobs. This podcast is not just about making money. It's about creating a legacy that stands the test of time. From analyzing market trends to mastering negotiation skills, we will leave no stone unturned as we guide you through different stages of real estate investing. We will bring on industry leaders and share stories from the good, the bad, and the downright ugly. So now, it's time to level up your real estate game. And there's no better way to do it than right here with us at the Professionalist Real Estate Investing Podcast.
Welcome, everybody. It's the Professionalist Real Estate Investing Podcast. I'm with Neil Henderson. How you doing, Neil?
I'm good. How are you?
I'm doing great. Well, Mr. Neil Henderson, he's a real estate investor, a co-host of the Truly Passive Income Podcast, and general partner at Nomad Capital. You got a pretty long rap sheet. I like that. So Neil, your background is really unique, and from nearly 2 decades of defense contractor to acting and then real estate, what was the aha moment that pushed you toward financial independence?
I'd say it's twofold. One, we had bought my wife and I bought a house together. Had a guest house at the front of it in Las Vegas. And it had, for about 30 seconds, it was going to be my ultimate man cave. And my wife said, oh, no, that's going to be the place where our guests come and stay. I lost that argument very fast, one of many that I've lost since then. And we owned the house for about 6 months. And I remember Christmas Day in 2013, my mom came to me. She hands me this article about this company called Airbnb. And she said, hey, I think this would maybe be something you guys could do with your guest house when people aren't staying there. And I was like, yeah, whatever, Mom. But I thought about it for a couple of days. And then shortly after New Year's Day in 2014, I went out there, took some photos of it. I'm a photographer. And I listed it on Airbnb. Having no idea how to do it, I did a lot wrong. But within 48 hours, we had our first booking. And we were 65% booked from that date until COVID shut us down in March of 2020. And that was my first aha moment with real estate, where I was like, wow, this is easy money for the most part. I mean, once we got our systems down, once we weren't the ones doing the turnover, my wife and I were doing the cleaning early on, I was like, this is really easy. Started looking for some ways to scale my short-term rental business. Las Vegas, by the time I started looking into that, Las Vegas was already becoming pretty hostile to short-term rentals. But I found this article on a website called Afford Anything by a woman by the name of Paula Pant. She's a pretty well-known real estate influencer now. And the article was about how she had converted one of her long-term rentals in Atlanta, Georgia to a short-term rental. And she was comparing the ROI on the return on time. Now, I don't remember much about the article, but I do remember there was a little link over on the right-hand side for a website called BiggerPockets. Yes. And I clicked on that link and I went down the real estate investing rabbit hole. And that was really my first, I would say, the moment that kind of changed my mindset around financial freedom, around real estate and everything.
BiggerPockets definitely is a great resource for anybody who's starting in real estate investing or is in real estate investing, because they have so many gems to help you out into getting into real estate. If you're a rookie or a seasoned vet, it's a great avenue to go through. Well, you mentioned that you was been inspired by the FIRE movement, which does financial independence, retire early. What does that personally mean to you?
Well, it means that you don't have to sacrifice the healthiest, best years of your life, trading your time for money in the hopes that one day you'll be able to stop working and do the things that you want to do with the people you love when you want to do them, at a time where your body starts to break down and a lot of times you can't do those things anymore. That's really what clicked for me. And it was the first time when I discovered the FIRE movement that I really kind of had the math in front of me, where I finally kind of broke the code on, oh, this is what it means.
Okay. Nice. Great. And then I wanted to get into like, because I know you do a lot of house hacking you started with house hacking also. This is I know a question that someone asked me before, so I'm definitely asking this question to you. What's one of the biggest misconceptions people have about house hacking, especially today?
Well, I would say that one is that only single people can do it. People with families can't do it. And that it has to cover 100% of your mortgage or it's not a legitimate house hack. And let me dispel both those. My wife and I have been married since 2011. We're having our 14th anniversary today. As a matter of fact, happy anniversary, my love.
Happy anniversary.
Thank you, Tony. And we started doing Airbnb when my wife was pregnant with our son. And right out of the gate, we had a newborn in our house when we were still figuring out Airbnb. And I just want to encourage people to look there. There's a lot of different kinds of house hacks, and it can work for almost anyone. You can do it from, buying a duplex and living on one side and renting out the other. You can do it with an ADU that's become a lot more popular now. There's a lot of communities that are allowing people and changing the regulations on auxiliary dwelling units where you can build on your property. And then the second is that it has to cover 100% of your mortgage. When we were in Las Vegas, our mortgage was low enough that we were covering 100% of our mortgage plus, and we were actually putting money away. We were paying down our mortgage faster at an accelerated rate, which I probably wouldn't do now, given what I know about interest rate arbitrage and all that. But now we turned that home into a house hack here in Carolina Beach, North Carolina, where we live. We're across the street from the beach. And we live it's a 3-story townhome. And the bottom floor is a separate apartment that we rent out as a short-term rental. And we live on those top 2 floors. Now, it does not cover 100% of our mortgage, but it covers 80% of our living expenses, and that includes our mortgage, our taxes, and our insurance, and some of our utility bills as well. So, so many people, I think nowadays, are so focused on trimming their expenses around the edges. If you stop spending money on eating out, if you stop eating avocado toast, if you stop, getting, lattes from Starbucks, that you'll be in a better financial position. And I think that's all good, and you should do that. But I think you really start to make moves when you're able to eliminate 2 of your biggest expenses that most people have, which is your housing and your car. Now, all my cars are paid off. I don't do car loans anymore. I've done it in the past. I learned my lesson. I buy for cash. I prefer to buy used. I haven't bought a new car in a long time. And I have eliminated 80% of my housing through house hacking. Now I'm 90% ahead of most Americans just because of that.
Yes, that's true. Yeah, because the biggest, always the biggest expense is where you live, where you rest your head at, and drive. Like automobile prices now, they're outrageous right now. And I tell people this too, just like what you said, I always buy used cars too. You buy a brand new car with 0 miles, as soon as you drive it off the lot, it depreciates 20% right off of it, as soon as you drive it off the lot. So why buy something brand new? And everything, I tell everybody, everything you basically can get a warranty for. So why not buy used? It isn't that structure of I bought something brand new to buying something used is that concept is you might as well just throw it out the window. I said, as long as it's got 4 wheels and it can take you there and it's dependable, that's all you need basically.
Yeah.
Stay with us. We'll be right back.
In the fast-paced world of real estate, success hinges on information. Introducing PropStream, your all-in-one real estate solution. Find properties, analyze markets, and generate leads effortlessly. With PropStream, you're always one step ahead. Access it anytime, anywhere, and watch your business thrive. Don't miss out on the future of real estate. Get started with PropStream today. Visit trial.propstreampro.com/Tony Jacobs for a 7-day free trial and revolutionize your real estate game. PropStream, your key to real estate success. Don't wait. Start now.
And that's a hard it's a hard concept for people. You know, you don't have money, you finally get money at some point in your life, and you want to have some nice things. Well, what you're doing is you're buying an anchor that is going to keep you, or a ball and chain that you're going to be carrying around for as long as you have a payment on that car. And eventually, I mean, it's going to depreciate down to nothing by the time you've got it paid off in most cases. And I think a lot of people just don't make that mental shift. And I think that's a shame.
No, I'm glad you said mental shift. So how do you go about having that mental shift? Because mental shift, definitely, that's one of my number one things is the mindset, because a lot of people don't have that mindset to shift their gear into, okay, how do I go about starting out getting financial freedom? Everybody wants, not everybody, but a lot of people do a 9 to 5. So how do I get out toward that 9 to 5 into something that, okay, I can use this to free up time with my family? Because I tell people that's one thing we can't buy. We can't buy time because time is limited. And then us enjoying ourselves with our family, like to me, that's what life's about. Enjoying time with our family, using all the time, not working 9 to 5 and not working tremendously amounts of overtime. So mind shift wise, how did your mind shift change from where it was at working until where it is now?
It was a couple of different ways. One was Dave Ramsey. I read Dave Ramsey's book. I think Dave Ramsey is a great starting position for someone who's just trying to get a handle on their finances. His whole idea of the baby steps of, of one, just living within your means, which is hard. I get it, but like you're never going to get ahead if you can't live within your means. Saving $1,000 emergency fund, even if you've got credit card debt, paying down that credit card debt, paying attention to, the interest rates, any interest rate that's above 6%, pay it off. Like if it's below that, you can figure that out. I don't agree with Dave Ramsey that you should not use debt at all, because I'm a real estate investor. But when you're getting started, you really, if you aren't used to using leverage and using debt, just start with Dave Ramsey, man. Just like get control of your finances, build an emergency fund. And the second one was Robert Kiyosaki. I mean, the Purple Bible.
Oh, yes. Yeah.
And it's not a how-to book. It's just a mindset shift book, but it really kind of opens your eyes to, all right, what am I really trying to do here? And once I had my finances under control, and I didn't have a bunch of credit card debt, I'd learned how to sort of use leverage. I started tracking my net worth. Every month I would sit down, I would figure out how much my house was worth, what my mortgage was, what kind of debts I had, how much cash I had in the bank, how much, what my money I had invested was worth. And you start to see that net worth grow, and you start to understand what it is you're building towards. Now, the FIRE movement will talk a lot about investing in low-cost index funds, building up a portfolio, a nest egg of 25 times whatever you think you need to live on in retirement. So if you think you need to live on $100,000 a year in retirement, then you're going to have to save 25 times that in order to live on that $2.5 million. And the less you can live on, the less you're going to need for that nest egg. And that was a mindset shift for me as well, because that was the first time anyone had ever really spelled out the financial freedom math for me.
That's great. And I'll go back to the beginning where you was talking about, because I've been in so many debates with people about Dave Ramsey. He is a great starting point. And yes, he teaches about paying off all debt. But like when it comes to real estate, even in business, I tell people there's a distinction between good debt and bad debt. But both of them, they're two different things. You want the good debt because that good debt actually opens you up to opportunities where bad debt doesn't open you to no opportunities. So definitely with real estate investing and business wise, that good debt is always good. So I'll get into a little bit about go ahead.
No, I was going to say, yeah, I mean, I'd just say those two books, Dave Ramsey and Kiyosaki, Rich Dad, Poor Dad. They're both great starting points. I would say start with Dave Ramsey. If you're still just struggling financially, start with Dave Ramsey. And once you've got control and once you feel like you're no longer just living paycheck to paycheck, then read Kiyosaki's book. But then once you kind of get a taste of Kiyosaki, go beyond that, because Kiyosaki really doesn't get into the nuts and bolts of how to be a real estate investor, but he just sort of opens your eyes to the possibilities.
Yes, indeed. And I want to get a little bit into, because you got your hands in the self-storage, and I know self-storage was definitely huge around like the pandemic time and everything. So how did this shift you from most people, they want to either get apartments or a single family home? What drew you to the self-storage investments?
Yeah, I first learned about self-storage investing at the Best Ever conference in 2017. It was the first time I'd really been exposed to commercial real estate and syndications. I was learning about raising capital for multifamily syndications. I was doing a little bit of it at that time. And I saw a man named Scott Myers get up on stage, and he spoke about self-storage, and he talked about how it's a commercial real estate asset class that is a lot simpler than multifamily. There's no tenants, no trash, and no toilets. You're really just renting people a box of air on a month-to-month basis. You don't have 12-month leases. And on top of that, your expense ratio tends to be a lot lower than multifamily, whereas multifamily, you're typically going to have 50% of your gross income is going to be taken up by expenses, not including your debt service. Self-storage a lot of times is lower. It's more like 35% and sometimes even lower if you've had a facility for a long time and you're operating it efficiently. So it clicked for me. It was a very simple business model, but it was still commercial real estate. And I love commercial real estate because of how predictable it is versus residential real estate. And that was really what sort of opened my eyes to it. And then I literally at that same conference, I met my now business partner at a lunch buffet table, and he was a self-storage owner operator. Then we clicked, started hanging out. I started coming out to visit him. He was based here in Wilmington, North Carolina, and we stayed in touch for years, trying to find a way to partner up on something, and had a lot of false starts, but that finally came together in late 2021.
That's great. The reason why I wanted to talk about the self-storage is I told people, especially with that and that commercial side, you don't deal with tenants. You don't have to deal with plumbing, no toilet. They say everything's basically, when those self-storage, they're literally structured almost fireproof because they have everything's basically metal. You don't have to deal with that. And like you said, you don't have a year lease on it. It's month to month. So I think self-storage is one of those. It used to be one of those hidden gems, but now a lot of people, especially in my area here in California, they're just, if anything comes available self-storage wise, they're on top of it because it is a great asset. And the overhead cost, it doesn't cost that much because you're just going to be generating so much from it. Because right now I know a lot of people need self-storage, and I've actually talked to one because I even have a self-storage. And the people that I've been with, like, they're always full. They're always full. And I know that it's clean. It's they have cameras, security, everything is taken care of where you don't really have to worry about anything. So it's just a win-win with the people who rent it out and the ownership.
Yeah.
Okay,
go ahead. Sorry.
No, go ahead. I want to listen to more of your wisdom.
Yeah. So storage is a maturing asset class is how I would describe it. A lot of people picture the old self-storage facilities, all drive up, not climate controlled, a lot of times off in the sort of industrial area of town, not particularly clean. But now a lot of people, you're starting to see those much more, I call them storage palaces, the extra space, three, 4 stories, climate controlled, really clean office space, waiting rooms, and a lot more technology involved in it. Some of them are getting, Wi-Fi locks. You don't even have your own locks and things like that. So it's really a maturing asset class. And a lot of the institutional players have discovered it. And it's one of the things that's, going on right now is that there's billions of dollars in institutional capital coming together to buy self-storage or build self-storage. And, construction on self-storage has slowed a lot over the last 3 years, primarily because of the interest rate environment, the cost of construction, things like that. But the capital is still there and it's still coming together to buy it. So we really, we don't buy self-storage, we build it. We take old vacant big box retail stores, old warehouses, bottling facilities, things like that, and we convert them to climate controlled self-storage. So we're continuing to build because we're seeing an environment where there's going to be a drop in new supply coming online, but there's still all these institutional players that are looking to buy it.
That's great. And I'm glad you said that. Yeah. Cause the old self-storages is actually changed. Yes. I've seen a lot of them with climate control of the electric locks. Like it's changed tremendously right now. And I know a lot of them too, they're having more space for people who have bigger boats, bigger mobile homes. They have those areas for them to park if they don't want to park at their house. Okay, so you've raised over $17 million in investor equity. What's your formula for earning trust and confidence for investors?
Yeah, so it all starts, we often talk about in order to get someone to invest with you, you need them to know you, to like you, and to trust you. And oftentimes that's going to start with your friends, your closest friends and family. Those are the people who know you, like you, and trust you. And that was a lot of our early investors were friends and family of mine, friends and families and colleagues of my capital raising partner, Clint Harris. A lot of people from the white coat professional community. He was a medical device salesman, so he had a lot of friends and family who were white coat professionals. A lot of our early investors were those people. Well, eventually you're going to run out of that, and you need to sort of go beyond that. You need to get out there and get people to not only know you, but now they have to get to like you. And that's why, we go out and I do podcasts. I have my own podcast. We've got Truly Passive Income. We're not usually on there pitching things. It's mostly an educational platform, but it's also a chance for people to get to know us and hear us speak. Oftentimes when I'm talking to investors, they will mention that, oh yeah, I've heard you on your podcast a bunch of times. And so we're already we're not starting from scratch. And then finally, you need to get them to trust you. And that really just comes down to saying what you're going to do and doing it. We're operating, we're fairly new syndication. We've been doing self-storage for almost 20 years, but we're kind of new to syndication. We syndicated our first deal in 2021. We've only exited one of those deals, did pretty well. And so that's sort of where a lot of the trust comes from. But what it looks like is like a bunch of circles. You've got the people who know you, and your conversion rate's going to be very high with those people. I think early on when we came to people and said, hey, you want to invest in this? We're converting a Kmart to a self-storage facility. Who wants to invest? And probably 50% of the people we talked to wanted to invest. And then you got into another layer, and maybe it's the people who know them. They don't know you directly, but they know the people who know you. And well, now your conversion rate goes down to maybe 20%. And then you get a little further from that and you start getting to people who don't know you, where you're advertising on Meta. And now your conversion rate really starts to drop. And now you start getting into a numbers game and just, you're essentially having to do paid marketing and having to just not cold calls, but warm calls with people who have seen your ads. They've maybe heard you on a podcast, and you start a conversation with them. And normally what I will do, I very rarely will come at someone trying to pitch them about what we're trying to do. I will first try and understand what that investor is looking for. Because if we have somebody who comes at us and they're looking for immediate cash flow, or they want to do a 1031 exchange, we're not a good fit for that. We're doing essentially development deals. It takes us almost about a year to build out our facility. It takes another 24 months or longer to lease it up to stabilization where we can start paying distributions. And so we always tell people, listen, if that's what you're looking for, we can point you in the direction of some other operators that we believe in. They're doing some great stuff, but we're not for you. And that usually, you'd be surprised how much trust that builds when you tell somebody, hey, listen, I'd love to take your money, but we're not a good fit for you.
Great. I like that, because my last podcast, I was talking to a gentleman about this too. And it's about the trust that you develop with each one another, trustworthy, and doing what you say you're going to do. That is huge. Like, it's kind of like, you practice what you preach. You have to do that. And that's how you gain trust. And then just like the platform I have and platform you have, that's gaining trust, because you're out there, you're giving information that the average person doesn't know about it, but it helps them out to gain where they need to go to gain financial freedom. And then I wanted to ask with newcomers, because I deal with a lot of newcomers who want to get in real estate investing. What are the keys to, the do's and don'ts when especially approaching potential partners? Because I know some that I've talked to, they're like, well, I don't know who to go to. I want to do I might do a syndication deal, but I don't know anything about a syndication deal. They've heard of it, but they don't know how to go about it. They don't know the red flags, or maybe like what the numbers, if the numbers, as I could say, the numbers are not mathing up.
Yeah. So in order to be successful in real estate, I think you need three things. You need a combination of one or all of these things: time, experience, and money. And most people don't have all three. They may have time, but they don't have experience or money. They may have experience, but they've got no time and money. Or they may have money, but they've got no time. And without the time, they can't get the experience. And that's really where syndication comes in. When you've got people who've got the money, but they don't have the time and they don't have the experience. And what you're doing is you're leveraging someone else's time and experience. I don't do self-storage as a hobby. I'm in a building right now with roughly 16 people who are doing this full time. This is all we do. And there's a lot of experience and a lot of bumps and bruises that came along with that. And so the best advice I have for people who are maybe getting into syndication for the first time, as an LP, I could go into, somebody who wants to get on the GP side. But right now I'm talking about getting as an LP is, don't focus on the deal. So many people come in and they're shopping IRR, internal rate of return. They're shopping the returns. Oh, hey, look, on this multifamily deal, I can get a 16% return. Oh, but on this retail deal, I can get 21%. Oh, but on this light industrial, I can get 25. Don't do that. Find an operator who has experience and a track record and has been doing what they say they're going to do for a number of years. Like, I don't recommend that you sign up with an operator who's just trying out a new asset class. I don't recommend that you get in with an operator who's never done that asset class without their own money. And lastly, I recommend that if you get to a point where you're going to put some money in with somebody, do a background check. Talk to some of their previous investors. And yeah, I mean, that would be where I would start.
I'm glad you said that, because you want to know their track record. You want to know how many syndications, how many transactions have they been dealt with, because that speaks volumes in itself. Because someone can just say, yeah, I've done this and I've done that. Like, where's the proof? You need the proof to know how to go about, hey, should I be with this person or should I not? Because you're putting your capital up. So you're not trying to lose your capital. You're trying to gain that capital up. That's what you're trying to do, to go about furthering your income with real estate investing. So Neil, how can the audience connect with you with, because I know you're with the Nomad Capital and you have the podcast of the Truly Possessive Income podcast. How do people get in touch with you?
Yeah, well, check out our podcast, Truly Passive Income. It'll be wherever you listen to podcasts. If you search for it, it comes right up. But the easiest way to get in touch with me is just shoot me an email. I'm Neil, Neil. I don't spell it the sociopath way, at nomadcapital.us.
Okay, great. I'll put that all in the show notes and everything, and I will be subscribing to your podcast and listening to it also.
I appreciate it.
Everybody out there, thank you for watching and listening to the Professional Real Estate Investing Podcast. Like, subscribe, put any comments you need to on there, because I'm just trying to better people's education when it comes to real estate investing. And thank you, Neil, so much for the opportunity to interview you, and may you have a blessed day.
Thanks, you too, Tony. I appreciate it.
Thank you.
Looking to buy, sell, or invest in real estate? Let's make it happen together. Are you ready to find your dream home, sell your property for top dollar, or take your first step into real estate investing? Tony Jacobs, a dedicated real estate professional with eXp Realty in Northern California, specializes in helping individuals and families achieve their real estate goals. Whether you're searching for the perfect property, selling your home quickly and efficiently, or building wealth through strategic real estate investments, he is here to guide you every step of the way. With his expertise, market insights, and a tailored approach, he ensures you get the results you deserve. Call today at 530-646-7293 or email me at tjacobsrealestateforyou@gmail.com to schedule your free consultation. Your partner in real estate success, Tony Jacobs. eXp Realty of Northern California Incorporated, DRE number 02110892.